Hello, ladies and gentlemen, and a very warm welcome to today's webinar, which is brought to you by sharedserviceslink.com and sponsored by AccessPay. Today we're going to be looking at the 6 must-dos to ensure you have a Get SEPA Ready Plan. So before we go into the agenda, let's have a look at the speaker panel for today. We have quite a lineup of experts covering off this topic. My name is Susie West, and I'm the founder and CEO at sharedserviceslink.com, and I am presenting the following 3 speakers. We have Ali Moed, who's the CEO at AccessPay, Neil Gray, Senior Manager Corporate Business at Swift, and Neil Harris, who is Commercial Director at AccessPay. So as far as your role in the next 60 minutes is concerned, you do have a role to play, and I'm sure there were many reasons why you joined this webinar today. So if I can just ask you to think about what those reasons are, and they'll boil down as questions. So I'm sure you've got a lot of questions that you want to have answers to. So let's make sure that they are addressed in the next 60 minutes. And what you need to do is to send me your question nice and early, and I will put it to the panelists. All you need to do is submit your question in the free text box that's highlighted by the red line in the illustration. I will put those questions to the panelists in the last 10 minutes of this webinar, and make sure that you stay on for the Q&A just before we close the webinar on the hour. Let's have a look at the context and really just examine why we're having this discussion today. So as the scope of shared services increase, what we're finding is that shared services organizations are now owning much more of the purchase-to-pay process and much more of the order-to-cash process. So really, if you want to think about it, very much wing-to-wing in terms of the coverage of the process that they are owning. And therefore, we're seeing an increasing amount of shared services organizations owning and managing the banking relationships. So we're seeing that shared services organizations are becoming much more responsible for the payments and the collections that take place. And they're responsible to make sure that these transactions are carried out, as we would say, by the book. The interesting thing is that the book is changing with the onset of SEPA. And this webinar examines how to best prepare for those changes so that your shared services organization makes sure that there are no surprises along the way. So just before I introduce our first presenter, I'd just like to ask a quick poll, ladies and gentlemen. I'd like to understand where you are in your SEPA migration. So coming up on your screen now, you can see a poll. Where are you in your SEPA migration process? Maybe you're not sure. Or maybe you have yet to really make a start. Perhaps you have begun the process, you're in the middle of the process, or you're confident that you are fully migrated. We like to get these results, participation in these polls nice and high. So if you haven't already responded, please do so. We're at 64% of you voting. But just to remind you of the question, where are you in your SEPA migration process today? Not sure? We have yet to really make a start, begun the process, in the middle of the process, or perhaps you are fully migrated. Closing the poll in 3, 2, 1. Let's have a look at the results. Thank you very much. We are at 81% of you responding. So coming up on your screen now, let's see what the state of play is. So you can see here that the majority of you, so just shy of 90% of you, are really within the 3 ranges of we have yet to really make a start, begun the process, or in the middle of the process. So a third of you have yet to really make a start. So that's quite interesting, and only 2% of you have fully migrated. So with that in mind, I'd like to introduce the first speaker, Ali Moed from AccessPay. Over to you, please, Ali.
Thank you, Susie. Good afternoon, ladies and gentlemen. I welcome and thank you to be with me on this very interesting webinar. Why very interesting? Because it's all about SEPA today. So what I'm going to do is I'm going to start off with some important my agenda. So I'm going to talk about SEPA facts, some key important things that I would like you to know, 6 must-dos to prepare for SEPA, and then I'll hand it over to my best friend, Mr. Neil Gray from Swift, who would talk about security, because security is absolutely paramount in this day and age. So he's going to talk about security and how secure your solution should be from a Swift perspective, and then we'll do Q&A session. So what is SEPA and how can it affect you? So what is SEPA really? Is it really a pain or is it a door to a big opportunity? This is the question which a lot of companies I believe are having, and I would try my best to come up with a good answer to this question. So is it really a pain or is it a door to a big opportunity? Now let's take a brief look at why SEPA was evolved. What is behind this whole SEPA thing? What is behind the whole regulation? So basically SEPA, in short, SEPA makes single euro a reality. Okay, and how does it do it? It does it through harmonizing the payment scheme. What do I mean by harmonizing the payment scheme? So basically what SEPA provides to corporates is making and receiving payment through a single channel, through a single standard, through a single format. So you can be anywhere in the European state, in one country, and you can actually manage all your transactions through one single format, through one single channel. Okay, so that's just in brief about the background of SEPA. And who does SEPA affect? So SEPA actually affects 32 European countries, out of which 27 of them with immediate effect. So what do I mean by immediate effect? So SEPA is for those 27 states, for those European states, the deadline for those states is approaching really fast. So it's going to be about 1st Feb 2014. So that's the deadline for SEPA, which is 256 business days. So it's not a lot of time left, and this deadline is approaching really fast for the 27 European states. Now, what happens to the non-Euro countries? For the non-Euro countries, you do have a little bit of a leeway, which is 31st October 2016. So what does this deadline mean to you as a corporate? So like this image suggests, it's going to be an explosion. And you as a corporate, you need to take necessary steps to diffuse this explosion much before it explodes. And in this webinar, I am going to aim to discuss what these steps can be, should be, and what these techniques are, or how can you prepare yourself to be SEPA ready. One very other important point to note is that if you're not SEPA ready, one of the very important problem that the corporates will face is your banks will not communicate with you at all in terms of any payment related communications at all. So the banks will not communicate with you on any payment related communications if you're not SEPA compliant. Instead, the bank will penalize you and charge you for sending them wrong information, because the information that you would send them for payments, collecting or receiving payment, they will treat it as error and they will charge you for it. So you need to really prepare for SEPA. So let's start to look at some key benefits, but before that I'll hand over to Susie back for a polling section over here. So Susie, on to you.
Thank you very much indeed, Ali. So coming up on your screen, the second poll question of the day, please. If I can ask you, in terms of your transactions, what do you do more of? So please just one or the other. Credit transfers or direct debits? So in terms of your transactions, what do you do more of? Credit transfers or direct debits? Quite a simple question there. 59% of you have responded. If you haven't already responded, please do so, up to 66%. Closing the poll in 3, 2, 1. 71% of you responded. Let's have a look at the results coming up on the screen now. So actually we just come in at 74%. So coming up now, you can see 76% of you do more credit transfers and 24% of you do more direct debits. Interesting results. Back to you, please, Ali.
Thank you, Susie. So let's start off with some key benefits. I mean, there are a lot of benefits for migrating to SEPA, but because of the limitation of time that we have today, I would like to home in into 5 really key important benefits. One is one common standard. That's the first one. Imagine the French corporates communicating with their banks in their French local format. The Belgium corporates in Belgium would be DOM 80, Germany would be DTI, and they're all different format it's like a spaghetti at the moment. And so what SEPA actually does is resolves and kills this spaghetti into one straight line, which basically means you can be in any EU state and you can communicate in one common standard. So everybody speaks the same financial transaction language. So that's one common standard. The second very important factor, which will save corporates quite a lot of money and quite a lot of hassle, is you don't need more than one bank to be SEPA compliant. So for example, you can have one bank. It can be in any European state, any of the 32 European states, and you can operate from that bank to cross-border and local. So you can do any of these transactions just from one single bank. Currently, corporates do have multi-bank relationship, and hence I'll go on to the next point, which is greater cash visibility. So you don't have to have expensive systems for cash management and all these other things. You can have one bank account and you can manage your cash much accurately and much quickly. So that's a very important big benefit of SEPA. The other benefit is direct debit collection. So you can be currently corporates are using a lot of credit cards, for example, Visa cards, MasterCards, or any other sort of cards for collecting payments of their consumers outside their local jurisdiction. This can be completely dissolved. So with the use of SEPA, you can operate from anywhere in Europe and transact with anywhere else in Europe or even locally, obviously. So you can do all of that. Lower banking costs, like I suggested, that you can have one bank, you can agree your relationship with them, and if they see you as a good volume customer, then obviously they will. It's in their interest to give you a better deal. So rather than you having multi-bank relationship, you can have relationship with one single bank. Okay, so that's my key benefits of SEPA. Now I would go to the SEPA facts. So the first very important SEPA fact is the banks will not accept your files in any other format specified by SEPA. And over the period of time, we have had corporates who have actually asked us that, is this really going to be the case? I mean, will my bank not accept even something near to SEPA? The answer is no. You will have to be SEPA compliant. Your files have to be SEPA compliant. And if it is not the case, the bank will simply reject it, and the banks will charge you a penalty on sending them an erroneous file. So that's a very important fact number one. The second one is the mandate. So once you've understood that you need to migrate your mandates to new SEPA mandates, or your payment files, your credit transfer files, whatever, to the new SEPA instructions, if you are doing direct debit management, then it is the biller's responsibility, it is the corporate's responsibility to store these mandates, and it is not the debtor's responsibility. So in cases of a dispute, the biller has to have an easy access to all their mandates so that they can quickly find those mandates and give it to the debtor saying, or the debtor's bank saying that here's your contract and we haven't done anything wrong. So it's a biller's responsibility. The third important factor is, as a biller, you're obliged to inform your customers 14 days in advance of any collection you make. Now this clearly applies to companies who are interested in direct debit management. So if you are collecting monies of your customer, then you need to have a strategy of informing your customers either 7-day or 14-day, but 14-day is what is in the SEPA rulebook. You can agree the notification period with the customer, but you need to inform them in writing that you are intending to collect monies of their account. Now, you can do this one-off, so you can have a letter saying that you will be collecting money for the next 10 years or for an N number of period on this date and this amount, or you can decide that you can do this on a monthly basis or a weekly basis, depending on your frequency of collection. So this is something you are obliged to do, and if you don't do this, you are in breach of SEPA regulation. The point number 4 is bank selection. So basically, this is what I pointed out previously as well. It's really important that you make the right decision with who you bank with, because of SEPA evolution, because of SEPA enforcement, and the benefits it can give. One of the benefits it gives is that the banks cannot charge you differently for local and cross-border transaction. They can charge you whatever they want, but they cannot charge you differently, which means that if you have a good deal with your bank and if your bank has a wider reach in Europe, then you can from one single bank operate, and you won't have to pay multilateral fees and stuff like that. So it's the same bank, and you can, as long as if they have a wider reach, it's better for you. The next important fact, point number 5, is this applies to both the credit transfer corporates, direct debits as well. So if you're sending SEPA transactions to your bank, and if it's the bank's responsibility to provide you with a channel of communication, but in case if they fail to do that, or if they don't have a proper channel of communication with the corporate, and if they want you to use SWIFT, which is a very secure channel of communication, then in that case the bank are obliged not to charge you extra for using SWIFT messaging platform. This is again not something that I have said. This is again part of the SEPA regulation. So this is what you should be knowing and the bank should be doing as well. I'll move on to the 6th point, which is for all credit transfers. This is something different. So for all credit transfers, the charges has to be shared. So you can't decide that I'm a corporate and I'm sending money to my supplier and I would bear all the costs. According to the SEPA rulebook, the charges has to be shared. If you send a file instruction to your bank saying that the beneficiary would pay the charges or you would pay all the charges, the bank would reject that file and charge you more for technically wasting their time. So basically, you need to be sure that for all credit transfer, the charges mode is shared. Okay, whether it's local or cross-border, it has to be shared. The last point, which is data protection, and this applies to mainly to direct debit customers, that there are a lot of debtor rights as well. So the first and important right is the no question asked policy. So if your customer goes to the bank within the first 8 weeks, they will get to ask for a refund. They won't be asked any questions and they will get the refund straight away by the bank. They can go all up to 13 months. But in that case, the bank will then investigate the matter, and which is when you as a biller need to have the mandate, and there is a whole regulation around that, how you can store those mandates, how can you get them digitally signed or physically signed, but you need to produce a mandate in that case. The second right that the debtor has, among many others, is the debtor can define payment limits on their account. So the debtor can go to the bank and say, my biller, this corporate, cannot charge me more than this in any month or in any week, or I just want to pay them for X months, or can you just cancel my mandate? Even if they do have a contract with you, these are their rights. They can go to the debtor bank and they can say that to that bank. And the third rights they have many rights, but the third one out of the many is the blacklisting and the whitelisting. This is not currently enforced by banks. They are working towards it, and my prediction says that by 2016, I hope I'm hopeful that all the banks will have the system. But what blacklisting and whitelisting is, that the debtor has a right, and he can go to the bank, or she can go to the bank and say to the bank that this corporate ABC Limited is on my blacklist. And what it means is that ABC Limited can never take money of that debtor from their debtor bank. So it's like a database that the bank maintains of blacklisting and whitelisting. This is not fully enforced. It's an optional service at the moment, but it is coming in the next few years. So that's some really key important facts about SEPA. And before I head off to discuss about the 6th must-do SEPA Ready Plan, I will hand over to my colleague Susie for another poll section. So over to you, Susie.
Thank you very much indeed, Ali. So coming up on your screen now, in terms of payments, do you do more of local payments, cross-border payments, or equal amounts of both? So in terms of payments, do you do more of local payments, cross-border payments, or equal amounts of both? 64% of you have voted. Let's close this poll in 3, 2, 1, and have a look at the results. So coming up on your screen now, thank you. We were at 78% of you responding there. So coming up on your screen now, you can see that we have 48% of you, 48% of payments are local, and 41% coming in at equal amounts of both, and fairly low level of cross-border payments there. Interesting results. Back over to you, please, Ali.
Thank you, Susie. Okay, so I would start off with the first and very, very important plan that you must be aware of, and that's the understanding of SEPA rulebook. So like this image suggests, it can be quite complex. It can be quite daunting. It can be quite confusing. And hence, it's really important that you do make sure that you understand everything that the SEPA rulebook suggests. For this, the solution provider that you choose, the company that you decide to work, needs to have an inside-out knowledge about SEPA so that you remain compliant, you remain regulated, you remain within the regulation boundaries, and make sure that you're not in breach of any SEPA rules. So this is a very, very important factor. So once you have understood, which is the most important part, once you have understood the SEPA rulebook, and now you know the ins and outs of SEPA rulebook, the next very important fact is that you need to make sure that your data is fully validated. So there are a number of validations that you need to do, and I don't want to go into too much of detail about it, but it's important that you know that your data is validated. And the majority of the validations are around BIC and IBAN validation. So you need to make sure that your data is validated according to the SEPA rules, according to the regulation, to avoid penalties and charges by the bank. You can be charged anything from 3 to 4 euros to 11 to 12 euros per transaction. And this is just a straightforward bank charge, and you also need to account for the losses that you would have in lack of efficiency and going back to the bank and rectifying your file. All of that will also need to be considered. So it's very important that your data is entirely validated and it's correct before you migrate to SEPA. The third very important part is that once your data is validated, and this is for basically the direct debit collectors, that you need to make sure that your mandates are migrated. So for example, your mandate could be in any local format, in the DOM AT or CDTI or CNFOB or any local format. You need to make sure that you have a system in place that can take those mandates and transform them into SEPA friendly, SEPA regulated mandate. Alongside, it also makes sure, the system makes sure that your data is also validated, especially the BIC and the IBAN data. So this is very important. The fourth important factor is basically your customer onboarding strategy. This is very important, and I haven't seen many corporates actually paying a lot of attention on this. But according to the SEPA rulebook, you need to pay a lot of attention on this. So all your existing customers, first of all, you need to make them aware that you are migrating to SEPA, and this especially applies for direct debit, and these are their new mandates. And you need to make sure how you make them aware of. Could be a number of communication channels. You need to make sure that you're aware of, make them aware. And then you need to plan an onboarding strategy on the new system. And all of this needs to be planned well in advance so that you have zero downtime and you can still continue providing the excellent customer service to your customers. The fifth fact is customer communication strategy. So this again applies in terms of direct debit and credit transfer. So you need to make sure that you have a system in place that can talk to the banks in real time and can pull in messages from the banks, i.e. if you were not able to transfer money to someone, or you had a failed transaction, i.e. you were trying to collect money of someone but you couldn't because that person bank account changed, or there were not enough funds, or the person got deceased, or the payer refused to pay. There could be a number of reasons. So there needs to be an automated system that can allow you to sniff those messages and then create an alert in your system and letters in your system and emails in your system so that you can then fire them away back to your customers to tell them, Mr. Customer, I was not able to collect money of you. Please can you re-sign this mandate and give us your new details so that we can restart collecting monies of you. If you don't have a strategy and if you try to do manually, then it will end up in delays and you providing not good service to your customer. So that's point number 5. And my last point is basically supply selection and security. So it's really important that you make sure that whichever solution you go for understands the implication of security and just does not ignore it. So for example, there can be systems which are SEPA compliant, but they don't have any security angle on it. And it's your responsibility to make sure that the system is fully secure. And there are a number of solutions available for security. One which we prefer and which we like, and it's the best solution, is supplied by Swift. There's 3S Key initiative, which I'm going to ask my friend Neil Gray to speak about. But before that, I want you to make sure that you make the right choice. And one of the examples I wanted to give is that for non-Euro countries, for example, you may end up having two systems. One is the SEPA compliant system and another system to manage your transactions for local payments. In my opinion, you can do all in one system. So if you plan ahead, whether it's a Euro country or non-Euro country, you can have a nice, seamless, integrated system to allow you to function the way you would want to function. I will now hand over to my friend Mr. Neil Gray, and I hope I have done all the justice to this webinar. Thank you so much.
Thank you very much, Ali. So as Ali's just explained, it's appropriate with SEPA transactions, as indeed with any payment transactions, that you apply the appropriate levels of security to those. So for my part, over the next 10 minutes or so, I'm going to cover 3S Key, Swift's offering in the personal digital identity space. Now, as you may know, traditionally most exchanges on the SWIFT network are signed at the level of the institution. So for example, if a corporate is sending a payment instruction or perhaps a file of payment instructions, and indeed these could be SEPA payment instructions, if a corporate was sending these types of transactions to its bank, the payment or the payment transaction or file of payments would normally be signed at the level of the corporate, the institution. But what 3S Key is all about is additionally taking that signing capability below the level of the institution itself, but additionally down to the level of an individual working within the institution, within the corporate. Now, of course, there are many solutions for this in the market today, but what this picture hopefully shows is that they tend to be very proprietary. So for example, this is a photograph of a treasurer's desktop, but it could equally apply to someone in accounts payable, accounts receivable. Typically, every bank supplies them with their own proprietary technology. So you can see here a selection of those. There's an RSA token, there's some smart cards, there's some smart card readers of various descriptions, there's challenge response devices, they're USB tokens, etc., etc. The problem is that there's no one uniform mechanism. Typically, each bank, every application provider provides their own unique solution, and therefore from the point of view of the multi-bank corporate, it's costly and cumbersome to maintain. If we then contrast that with the 3S Key alternative, essentially what we provide at Swift is a single signing technology, in this case a USB token, that can be used for multiple purposes. Firstly, it can be used to authenticate the individual that log on to a particular application. This could be, for example, a bank's online banking system, or it could be some other application or system that a service provider is providing. So it can support login or authentication, and it can also be used to sign transactions or files of transactions, and again here we're typically talking about payments and collections. Now this technology is multi-bank, so it can be used with potentially any number of banks or service providers. It is multi-application, so it can be used for different lines of business. I mean, traditionally it would be applied in the payments, treasury and cash management space, but it could equally be applied to other services in the financial industry. It is multi-network. Now, of course, speaking as someone who works for SWIFT, we would love this to be used in the context of the SWIFT network, but it's very important to be clear that this signing mechanism is equally valid across other networks, other network providers, and indeed even over the internet. And it's also a multi-country solution. So hopefully you can see the contrast. Rather than multiple proprietary signing mechanisms, typically each provided by an individual bank or provider, what we're offering is a single solution that can be used across multiple banks, multiple business applications, networks, and countries. If we then look at the community perspective, the picture on the top left shows an individual working at a corporate, and in this particular example he's working with 2 banks and a service provider, in this case AccessPay. And you can see there are potentially a variety of different security mechanisms he might be using. Down the bottom you can see there's a smart card reader, in the middle there's some RSA tokens, and it may be that different platforms or technology solutions just use username and password today. Typically, each bank or service provider would be running their own local security infrastructure. That could be their own sort of local PKI framework, or it could be their own sort of system managing usernames and passwords. And if we then contrast that with what SWIFT provides with 3SKey, essentially we replace those different security technologies with a single security mechanism, which means that from the point of view of the individual working at the corporate, he has one technology that he can use across multiple providers, platforms, and networks. So hopefully you can see there's some benefit for him. But also from the point of view of the banks and the service providers, rather than each of them having to maintain their own local PKI infrastructure or their own security framework, they can all share off a single shared security platform that's run by SWIFT. Key to all of this, of course, is that you can be absolutely certain about who did what, which transactions and when. It's a given that it must be very secure and provide the level of security that one would expect in these situations. And the other key objective is all around reducing cost. So how does it work? Well, essentially you can describe SWIFT in 5 reasonably simple steps, or I hope they're simple. So if we first look at who the different parties are, so at the bottom you can see John. So this is an individual working in the finance function of a corporate. He could be in treasury, he could be in accounts payable or receivables. So we see the ultimate user. Then we see a variety of service providers. These could be banks, or it could be a technology platform, a portal of some description. And then at the top we see SWIFT. So those are the sort of primary stakeholders in the solution. And the first step in all of this is that John needs to obtain a token. And the way that this is envisaged is that either one of his banks or perhaps one of his service providers, technology partners, would issue him a token, and these tokens they would keep a local stock of. So from this local stock they would issue John the token. Now this token at this stage is purely a sort of a dumb piece of, it's just a dumb token. And the next step, step 2, is that he would need to activate the token. And he does that by plugging the USB token into a port on his PC, and via the internet, and I stress it is the internet, not the SWIFT network, via the internet he accesses the 3SKey portal, and one of the options on that portal is to activate the token. And in activating the token, a certificate in this slide shown as Corp 1234567 is generated on the token. So in this step, we've gone from taking a sort of a dumb device and by activating it we have generated a business level certificate on the token. Step 3 would then be to register, for John, would then be to register himself with his various providers. Typically, I guess we would envisage that he would register himself first with the institution that provided him with the token in the first place. And the way that registration is down to each institution. So it could be, for example, John walking into a branch of a bank with his passport, and then the bank effectively matching John, having proved his identity via documentation, with the given certificate. But more realistically, I guess we expect that the banks and the different service providers will provide some sort of electronic portal for doing that. But as well as registering himself with the bank that issued him with the token in the first place, he also has the possibility to use that same token and register himself with all of his other service providers that subscribe to the scheme. So if he, for example, is working with other banks, he could use that same token, even though he didn't receive the token from those banks. He could use that token and register himself independently with other banks and other technology providers that support the 3S key security mechanism. So at this point, he's got an activated token and he's registered with a variety of banks and service providers in the market. Step 4 would then be that he could use that token for a variety of purposes. He could, for example, sign a file of payments. It could be a file of SEPA payments that then get delivered to the bank, for example, over the SWIFT network for execution. Alternatively, that file could be signed and delivered to the bank via some other network or perhaps a proprietary host-to-host network that the bank provides. Or alternatively, he could use the token to authenticate himself at logon into some banking online portal or perhaps an application provided by one of his service providers such as AccessPay here. And then in each case, whether it's the banks or the service providers, step 5 would be that they would essentially go centrally back to SWIFT to check the status of the certificate, see if it's been revoked or not. And then if it's still a valid certificate, they would then either execute the payment transactions in the file or grant access to the portal that the individual is trying to log on to. So hopefully that's reasonably clear in terms of how 3S Key works. From our point of view, we believe this is a really good solution from the market. If we look at the different constituents, firstly, for John, the guy kind of working at the corporate, we believe it's a good solution because he's essentially got one token that he can use with multiple banks, multiple service providers, and he gets away from that plethora of different technology solutions that we saw in the first slide. So it's a much more streamlined way of applying security and digital identity to his transactions than the mechanisms that are out there today. So definitely we believe a real benefit for the corporates. For the banks and for the service providers as well, we think there are real benefits because again, rather than each of them having to maintain their local proprietary PKI infrastructures or having to maintain their own local security schemes, they can all piggyback off the shared security infrastructure that we run at SWIFT. And speaking of SWIFT, we believe that we are an ideal provider to do all this. SWIFT is known in the market as being secure, reliable, neutral, independent, a neutral, independent third party. And I think, our role as providing that sort of neutral, independent security framework on behalf of the community at large and globally indeed, we think it kind of plays to the strengths that SWIFT is known for in the market. So if we now look at what's been the take-up in the market today, you can see essentially where we are. The solution is a relatively new one. It's been around for about 18 months, 2 years, so still a relatively new solution in the market. But already we have more than 24,000 tokens distributed in the market. It's being used by some 15,000 finance professionals representing more than 2,000 corporates located in more than 58 countries around the world. And in terms of the technology providers that are out there, more than 50 technology providers and partners have already implemented 3S Key into their solutions, and that number continues to grow all the time. So I think a very respectable take-up in the market to date, and as I say, we're in countless discussions with market infrastructures, with communities, with individual technology providers, with banks, and we're also looking to grow the number of countries that the solution is supported in. If you'd like to find out some more information about 3S Key, then we have quite a good website for that. It's not under the Swift website, it's actually under a dedicated www.3skey.com website, and you can see the front page, and if you want to know more, you just click on the relevant tab, and there's plenty of documentation, there's videos and white papers, and lots to be getting on with. Alternatively, of course, you're free to contact me. I work in the London office in the UK, and I'd be delighted to field any calls, and you can see my contact details there if you have any specific questions or points that you'd like to raise with me. Happy to handle those as appropriate. So that brings to a conclusion what I intended to say today, and I'll now hand over to Neil Harris.
Thank you, Neil, and hello. I'm going to take you through a brief introduction to AccessPay and our solutions this afternoon. AccessPay are a UK-based organisation with regional offices in France, Germany, India and the US. We have 40 employees currently and are privately held, VC-backed, and have just over 250 clients. Really our dedication is to the payments and cash management space. Transaction automation is our key topic. What we're about really is making real-time payments and cash management accessible, hence the name of the company, AccessPay. So accessibility from an affordability context, from a utilization perspective, we have intuitive, very simple, easy to use screens, so from a user experience it's accessible, and also being cloud-based, it offers enterprise level infrastructure at a fraction of the cost, so accessibility on a number of levels. As we've already discussed, it's a cloud-based payments hub and cash management solution, so we include payments as well as direct debit collections and management solution. We support a number of messaging platforms including Swift, SEPA, ACH for US, Automated Clearinghouse, as well as BACS and faster payments within the UK. We have a policy of being ERP agnostic, file agnostic and channel agnostic. What that means is that essentially we can take any data in any format and send it on and forward it, transform it, as Ali mentioned previously, into the correct mechanism for whichever messaging process that you require. With regards to the ERP, we also offer seamless ERP integration, because sometimes you don't just want to take the data and push it across, you also want feedback back into the ERP to get that feedback back in as your principal back office system. So we offer a number of APIs into the back office systems to provide that seamless integration. We offer a high availability environment and platform. It's scalable as well, so we have a scalable infrastructure that can grow with your business. So essentially you pay for what you use, and being cloud again, it's easy to upgrade, it's easy to add modules as your requirements change, as they do, or as compliance change, as we're seeing within the SEPA rulebook today. We also offer full accessibility not only through computers and desktop applications. We also offer mobile accessibility, so you can access reports and approvals via mobile devices, and as it says there, we support a number of devices and platforms. Should you require any further information for this, for our solutions, or any further information with regards to SEPA or any of the other messaging platforms, please don't hesitate to contact us. You can contact us via the website, which is www.accesspay.com, or indeed you have our details, Neil Harris and Ali Moed, which will be sent to you following the webinar.
Thank you very much indeed, Neil. So it looks like we're moving straight to questions, of which we have a lot. So we've got probably about 15 questions. Let's see if we can get through as many of those as possible. So let's start off with a question to, I think, to Ali. Is the SEPA deadline only applicable to the payment type, i.e. all European payments within the SEPA region have to be sent as SEPA payments? Or does it also affect the payment files that corporations send to their banking partners? Further to that, so it's a big question for you, Ali, is it required to upgrade the current payment formats that allow the issuing of SEPA payments to a SEPA format? Question for you, Ali, please.
Okay, so I'll answer the first part. The principle is that, so I'm going to talk to you, I'm going to answer this in a very end-to-end endpoint related. So for example, a corporate and a bank. So for example, if the corporate is communicating with the bank, which is the final clearing, in a way, the final destination, which is the bank for the corporate, the format has to be SEPA. And whether it's if that corporate belongs to the 27 states where SEPA has stated that they need to be SEPA compliant by 1st of February, then they will have to comply with that by 1st of February, i.e. sending payment. It can be any payment, so it could be the direct debit scheme, could be the credit transfer, could be any form of payment transaction they do with the bank. They will have to be SEPA compliant by 1st Feb 2014 for those 27 EU states. For the non-Euro states, this doesn't apply till the 31st October 2016. So that's the first part of the question. The second part I didn't quite understand, but from what I understood, if you are sending communication with any partner organization or any other organization which is not technically a bank, then you're fine. Then as far as I know, you can do whatever you want. But as long as that organization finally sends information to the bank, that has to be SEPA compliant.
Okay, good. Thank you very much. Another question for you, please, Ali. How do you see the status of SEPA compared to the GCI initiatives?
In what way? I mean, in what way? I mean, for in terms of status of SEPA, it's quite clear according to the SEPA regulation that they have set a deadline, which I'm sure some of the EU countries are struggling to meet, but they have set the deadline. So far, there are no news of shifting those deadlines. So in terms of the status, it is the rule book is defined, the deadline is there, and they need to perform accordingly.
Okay, so let's move on. Do credit transfer charges apply to suppliers and employees for SEPA? This is for you, Ali.
In terms of credit transfer, the charges applies to the organization that is making the credit transfer. So for example, if John sends money to Julie, then John needs to agree with his bank what the charge will be, and then John will have to share that charge with Julie. So that's how it works in terms of credit transfer. Now, Julie can be an employee. Yeah, so that's a good question. Julie can be an employee, can be anyone, but then I think the corporate needs to have some sort of a policy in place where they can maybe reimburse Julie, or that's a different thing. But as in terms of the rule book, which is, I believe it's a clause 924/2009 as far as I remember. That's a clause of the rule book which suggests that the credit transfer has to be shared. I will have a look about the employees thing, because I understand, you know, the employees do not want to share those charges. I can have a look about that and get back, but generally it is shared. It has to be shared.
Thank you. Regarding the pre-notification letter that you referred to in your 6 must-dos, Ali, it has to be, the question is, does it have to be for sure 14 days, or can it be agreed with the debtor, i.e. in the contract?
Absolutely. So the rule book suggests 14 days, but the rule book also suggests that you can agree with the debtor on a notification. But what you cannot do is not to send a notification. The notification is important, but you can agree the timeline with the debtor.
Okay, another question for you as well, Ali. Is it necessary that a new mandate in case of a change in the account number? So I think the question is it necessary to issue a new mandate in the case of a change in the account number?
The good question. This is a very, very valid and a very good question. I would suggest to have a new mandate in case of a new account number, and there are a number of ways that can be done. I know it can be painful to do that, but again, through automation, you can regenerate a letter, and the letter can say, this is your new account number, these are the payments you're going to take, and that's it. So according to the SEPA rulebook, I just want to add that the debtor doesn't have to physically sign it, but the creditor, the biller, will have to inform the debtor that these are the changes to your account. So I would say yes, they need to re-inform the debtor, and they should actually have a new mandate.
Okay, I'll continue with another question for you, please, Ali. Other than BIC and IBAN, what other types of data should be validated?
Okay, this is a brilliant question, and this all comes down to planning. Now, there's no short answer to this, but I'll be very quick in explaining. There is currently BIC and IBAN is the only important requirement, but they need to be aware of that there is something called e-mandates. It's an initiative by SEPA. It's optional, but it's going to be, my prediction is going to be mandated in the next a year or 2 years or so. When that happens, then there will be a lot more validation that's going to happen on the mandate, i.e. even down to the address validation, to the postcode validation, to a lot of different validation. But for now, the IBAN and BIC are the most two important validation that they need to perform, but they need to keep in mind that whichever system they have, it is capable of this new e-mandate thing and the new regulations SEPA is going to bring, so they don't have to keep changing their system.
Okay, we will come on to some security questions in a moment, which I will put to Neil Gray, but just continuing with a couple more questions for you, please, Ali. A question here, if we are making payments via our bank's payment system, should this individual contact the bank to ensure that they are fully compliant?
The answer, in my opinion, is no. If you're using a bank payment system, i.e. an online banking system, then in my opinion, you don't have to, I mean, when you're doing a credit transfer, obviously through a bank system, because you can't do direct debit from a bank system, but if you're doing a credit transfer from a bank system, then the bank takes the onus and the responsibility of that transfer happening in SEPA format anyway. So in that case, that they are fine. But this only applies to companies using bulk transfers or companies using not bank systems and using other methods of communicating with the bank.
Okay, good. A question for you, please, Neil Gray. So are there extended payment deadlines from using the 3S key? If using BACS, can you submit and approve payments later into the evening, so later into the day?
Good question, but I think no, it doesn't impact payment deadlines in any way. It's really just what this topic is really all about is it's pushing the checking of who signed and authorized payment instructions back to the customer. So the bank is the bank is actually able to check which individual at the customer authorized those transactions to be made on behalf of the institution. But in terms of the deadline for submitting payment transactions, no, they're unaffected by this.
Okay, and again, a question for you, please, Neil Gray. Is a solution like the 3S key required within SEPA if this organization uses a bank for several countries already and they already have one token? They're assuming it's more for clients with a multi-bank infrastructure than for an organization that has a single bank relationship.
Yeah, correct. I mean, I'm not trying to imply that 3S key is the only solution. I guess what we're saying is that if, like many corporates, you find yourself dealing with multiple banking providers, perhaps even in where the banks are in multiple countries, and each bank has provided you with a proprietary solution, then you may find that cumbersome, and it may be simpler to move to a model like 3S key where you can use the same security technology across multiple banks, multiple countries, multiple service providers. But yeah, point taken, if you're primarily dealing with one single banking institution and they've already got a particular security technology that works for you and the bank, then perhaps there's no strong justification to move to something like 3S key. I think the real benefit comes in a multi-bank, multi-user.
Okay, good. Okay, we've only got time for a couple more questions, but they're great ones, and make sure you stay on the line. Can SEPA mandates be established online, and if so, how can the mandate be provided to the bank as evidence that the transaction was authorized? This is a question for Ali, please.
Very good question. SEPA mandate can be established online. So there are until e-mandates comes into picture, you can have any mode of creating a mandate, and obviously it's advisable that when you do create a mandate, it's validated and stuff like that online. So yes, you can create online, and in terms of handing over those mandates to the bank, that's very much between your and the bank relationship. So the bank can come back to you 13 months later or 12 months later or 6 months later saying that there was a dispute, we had given the money back, but now what do you want to do, how do you want to handle? So it's very much of a corporate to bank relationship based on a case-by-case basis.
Okay, good. Final question, and this is again for you, Ali, quite a big one to close on. Will all the banks be SEPA ready by February next year?
Aha, this is where this is what is a very important question, and my gut feeling says no, and I hope I'm wrong, but they have to, because if they don't, simply their banking licenses will be revoked. So they will have to be SEPA compliant, else they won't be able to transact, they won't be able to operate according to the EPC regulation.
Ali, Neil Harris and Neil Gray, thank you very much indeed. That was a very informative webinar today. Ladies and gentlemen, make sure you join us next time for the next webinar in our webinar series. I look forward to welcoming you then. For the time being, goodbye.